Today we have Rhian, Horgan, and Jennifer Brown from Silvur, and they will be kicking off this leg of our FinTech series for the summer. So I'll let you guys have the floor.
All right, Amy, thank you so much for hosting us today, and thanks to the CCUA. Again, my name is Rhian Horgan. I'm the founder and CEO of Silvur. I'm joined today by my partner, Jennifer Brown, who's our VP of Partnerships. We are both from the Northeast. Jennifer lives in Massachusetts. I live in New York, so great to be speaking with you all today. I thought today what I would do is spend a little bit of time walking you through the member problem. What is going on with retirement in America today, so that we really understand why your members need support. Was going to share some insights of what we've learned from some of the data that we're collecting, and so really highlighting where we see some of the more at-risk members in the population. And then we'll talk a little bit about how Silvur can help you. I thought before we kick off, though, that I would share a little bit about from a kind of a personal perspective on why I started Silvur, because it did start close to home. So prior to starting the company, I worked for JP Chase for about 17 years. And as a result of that, my parents, as they got ready for retirement, started asking me a lot of questions. So I'm one of four daughters. I'm the only one that worked in finance. And so all the questions came to me. And embarrassingly enough, I did not know the answers to their questions. They were trying to navigate what I would have now learned is very common questions. So they were trying to figure out spousal benefits for Social Security. Their fact pattern was that my mom had not worked outside the home for quite a period of time, and they were trying to figure out whether or not she had her own benefits versus spousal benefits. They were also trying to navigate with Medicare, their age difference and how to bridge to Medicare for my mom, who was 5 years younger than my dad. I did what I soon learned a lot of Americans do, which is I went to the Social Security website to try to understand Social Security benefits. It was full of jargon, super overwhelming, kind of left me with more questions than answers. I then went to Dr. Google, where I was kind of overwhelmed by the amount of content that was out there and unsure what I could trust. And I finally found myself at Barnes & Noble buying a 300-page book on Social Security. And that was the moment that I realized that retirement in America is way too complicated, deeply unfair. All of us on this phone are paying Social Security taxes every 2 weeks in our paycheck. And it really shouldn't take 300 pages to explain how we get that money back out when we go to retire. So inspiration was really trying to solve the problem for my parents. But as I dug in and did a lot of user research, I realized that my parents' situation was actually quite common. And there were millions of Americans who were looking for guidance, in particular on some of these foundational decisions around government benefits. So a little background on Silvur. Our goal is to help you help your members retire fearlessly. They are deeply afraid of running out of money in retirement. This is the first generation of Americans that are retiring en masse without a pension. And so they have to make their money last a lifetime. The anxiety they feel, I would equate to being unemployed for 30 years. So think about if you've ever been unemployed for a few months, the anxiety. Imagine that now being the rest of your life. Our goal is by serving members to also help future-proof you against wealth transfer. We do that by delivering retirement education and engagement to your members over the age of 50, delivering value to them so that they stay with you throughout their retirement, and also bring their adult children, into the experience over time. One of the things I sometimes hear from credit unions is that they've already kind of quote unquote checked the box when it comes to financial wellness and retirement. And oftentimes they'll say, oh, I have a wealth management team, or we have a partnership with someone that we refer people to. And what we realize when we dig into the numbers is that those types of relationships, whether it's a partnership with LPL or Raymond James, or it's a third-party referral program, typically credit unions are serving less than 3% of their members. But the reality is that 99% of your members are going to retire. And so this is a problem that everyone faces. And in today's world, where members now have the responsibility of navigating their own retirement post the elimination of pensions, it's a huge risk for, I would just say, kind of the American system. And solving for 3% isn't enough. Like, we really have to figure out solutions that solve for a lot more members if we're going to create kind of a stable retirement for our members. If your credit union looks like many of the credit unions we work with today, it's likely that your members over the age of 50 are your core depositors. These are the folks that have deposits that are typically 2, 3, 4x your younger members' deposits. And while I know that many of you are focused on how do you bring in younger members into your credit union, the reality is we have to walk and chew gum. You need to be able to serve both older members and younger members. You need the deposits of the older members to fund the borrowing of the younger members. And the real question is, how do you retain them at this moment and juncture in life where they are controlling most of the wealth in America? So members over the age of 50 controlling 80% of wealth in America. But those assets are in movement. They are moving to different places as members retire, and lots of different financial providers are targeting them. It may be for you that you think about your competitor as a local community bank, or perhaps when it comes for investments, it might be Charles Schwab or Merrill Lynch. But there are a lot of competitors out there, and one of the ones I think a lot about is AARP. It's likely that most of your members over the age of 50 are AARP members. And AARP gives them a membership card when they turn 50. And for the next 15 years, they tell them that they're standing up for them, that they're advocating for them in Washington, that they're working to reduce drug costs, that they're working to increase solvency for Social Security. And at age 65, members then choose them as the default safe choice to enroll in Medicare. AARP generates $1.7 billion worth of revenue a year. $600 million of that revenue comes from selling Medicare policies. Once they're done selling Medicare, they then cross-sell CDs, annuities, HSAs, credit cards, deposits. And so when you think about competitors, I would just encourage you to think about not just the traditional competitors, but anyone that is touching the retirement wallet does not want to just sell, capture one piece of the wallet. They want to capture all of it and consolidate it with their organization. When I speak with many boards, one of the things we hear is this concern about wealth transfer. And I think what a lot of folks are saying, just more kind of directly is, well, what happens when my older members die? And the reality is that your members that are turning 60, 65 today are not dying tomorrow. They're living another 20, 30 years. And so one of the things that we think about when you think about protecting your institution from wealth transfer is, how are you serving your members through this retirement journey so that you don't actually get consolidated out before members pass away? There are a couple of different moments, I would say, of major risks in the system that credit unions need to be aware of. The first is right when members retire, they consolidate their assets. Many members come into retirement with assets sitting in 6, 7, 8 different places. That might seem like a lot, but when you think about 401ks and credit cards and loans, it can add up pretty quickly for someone who hasn't decided to consolidate everything at one institution. What happens around retirement is folks say, look, I want to spend time traveling. I want to be with grandkids. I want to pursue my passions. They don't want to log into 6, 7, 8 different financial institutions to access their, retirement paycheck. So what they do is they consolidate from 7 or 8 institutions to 2 to 3. And the question is, do they consolidate with you, or do you get consolidated out? When they tell us about their consolidation, what they say is they're looking for a place that's local. They're looking for a partner that's trusted and a partner that's safe. Local, because a lot of decisions around retirement are based on where you live. Safe, because they know that these are huge sums of money they're making decisions about. And trusted, because they want to make sure that you're going to take care of their family. When I think about those adjectives, local, safe, trusted, I think that describes credit unions. So a real opportunity for credit unions to not only make sure you don't get consolidated out, but also grow your share of the wallet. The next thing that happens during retirement, and it's not on this picture, is that the women end up with the money. The reality is that women outlive men. And so women in many households will end up being kind of the final holder of assets. Why this is important is that over 80% of women fire their financial advisor when their spouse dies. I'm going to say that again. 80% of women fire their financial advisor when their spouse dies. So what that says to me is that oftentimes as a financial institution, we are speaking to one part of the household, but not the whole household. So if you want to retain assets, you have to speak to the entire household and make sure that you've got a relevant seat at that family table, not just with one individual. And then finally, we have end-of-life transfer. As end-of-life transfer is happening, this is where there's actually a really interesting opportunity to engage with adult children. Adult children in their 50s and 60s often get pulled into mom and dad's healthcare. They're trying to understand their billing, things like that, which really start to give them interaction with a financial institution and a great opportunity to connect in with the credit union. One of the things that I truly admire about the credit union mission is a true commitment to financial wellness, and it starts really early on. When you think about what you are doing as an institution to serve your members, in members' 20s and 30s, you're spending a lot of time really helping them understand the foundations of finance, learning the basics of borrowing, making sure they start out life with a strong FICO. Hopefully they graduate into the next stage, which is learning how to save. And in your 30s, 40s, and even early 50s, net worth starts to become a really interesting metric for you to start thinking about, like, am I saving? Do I have enough saved? You might think that by the time members turn 50, that you've done your job, right? You've been training them for 30 years on credit, on borrowing, on saving. But the reality is that when members get into their 50s, there's a whole new set of decisions that they need to make. They've got to figure out Social Security, Medicare, taxes, inflation. And the reality is that the old metrics don't actually help them anymore. Whether you have a FICO of 650 or 750 doesn't tell me anything about how long my savings are going to last in retirement. So one of the reasons that we're super focused on this age demographic is there is this new set of decisions that need to be made, and the solutions that you're delivering around FICO to your members in their 20s and 30s do not solve the problem that your members in their 50s and 60s have. So let me talk a little bit about Social Security. I imagine that many of you may see the tax coming out of your paycheck every 2 weeks. And so Social Security is most members' largest retirement asset. The average retirement benefit in America on Social Security is about $2,000 a month. That adds up to $500,000 over the course of retirement. So it's a huge sum of money. It's particularly important because most of your members are retiring without a pension. And Social Security actually is an annuity. It's income that's guaranteed for life. So whether you live to 80 or 90 or 100, your Social Security is going to be there for you. What's interesting is that when you think about decisions that everyone makes, Social Security is one of them. So 99% of your members are going to elect Social Security, but it's really complicated. And one of the things that's interesting for credit unions to think about is that at the end of the day, once a member makes their election, they actually have to choose where to direct deposit it. There's no checks anymore. You have to direct deposit Social Security. So what we think about at Silvur is, like, how do we help members navigate the complexity of Social Security, but also make the ask that they deposit it with the credit union so that you can have access to that 25-year income stream at the credit union. Again, you do the right thing, you educate people, you are also given the opportunity to then ask for the business. Second thing I just want to flag is Medicare, and this may seem a little bit odd that I'm talking about healthcare when we're a financial technology company, but the reality is that in retirement, health is wealth. The average American couple will spend $300,000 over the course of retirement on healthcare, and that, by the way, is just their monthly Medicare costs. That does not include long-term care. Long-term care is an additional sum of money on top of that. So when you think about your average member, that's a huge liability, something that they're very concerned about. And by the way, just like Social Security being complicated, Medicare is complicated. Things like where you live actually matters. So what I pay for Medicare in New York is different than what Jen will pay for Medicare in Massachusetts. I'm sorry, I see a question. Oh, I think we're just saying drop your questions in the channel, so I'll leave that there. Sorry, let me just move the screen so I don't have to see this anymore. Oops. Okay. So again, thinking about decisions that everyone makes, 99% of your members are going to enroll in Medicare. So one of the things that we do at Silvur is we guide them through this complex set of decisions. So whether it's the education, helping them understand the costs, when to enroll, the differences between Part A and Part B, or Part D and Medigap. And we also provide them with the financial tools and calculators to help them estimate the costs. So if I take a step back, what is Silvur? Silvur is a QSO dedicated to supporting members on their retirement journey. Our goal is to give members the information they need about Social Security, Medicare, taxes, and retirement, help them understand how long their savings are going to last, figure out what their Social Security benefits will be. And while we do that, then make sure that they see the credit union as the place to consolidate their assets as they navigate retirement. I wanted to take a few minutes to share with you some of the insights that we have on what's happening with members' retirements, because I think sometimes it's really important to understand where the risks are in the system, so that we understand, where the more vulnerable members are. So today, when we look at the data, we're tracking over $40 billion in retirement savings. The data that we're tracking suggests that 50% of the assets is going to move in the next 3 years. So when you think about risks to your institution, huge sums of money in motion. And the question is, are they coming to you or are they leaving you? 20% of members that are using Silvur are enrolling in Social Security in the next few years, which means an opportunity to capture direct deposit or also a risk of losing direct deposit. Today, we know that 97% of the assets we're tracking are not held with the credit union. I'm going to say that again, 97% of the assets are not held with the credit union. So you have I'd say an uphill battle to make sure that you can grow your share of this wallet. And then finally, based on the partners that we have today, 80% of members are actually not depositing Social Security with the credit union. This number, I think, really surprised a lot of our partners. And when we took a step back and reflected on it, one of the things that we noticed was that most credit unions don't actually ask for the business. When you think about direct deposit campaigns at your institutions, you're typically targeting payroll, and you're often saying payroll 2 days early. And that picture for the payroll image is a 30-year-old who looks like they're working. If I'm 65 years old and I'm enrolling in Social Security, an ad for payroll 3 days early does not actually speak to me. And so one of the things is to think about is the business may not just naturally come to you if you don't actually ask for it and show members that you actually care about this phase of life. So let's talk about some of the risks in the system that we're seeing through our data sets. The first one I would flag is that women are disproportionately at risk of aging into poverty. What we're seeing in our data set today is that the women who are using Silvur are twice as likely to be single versus men. It's not because they're 80 and their spouses have died. These women are on average 59 years old, but we see an increase in divorce, in single folks, people having to figure all this out themselves. When we look at the data, women's savings are 25% lower than men. This is typically a result of lower lifetime earnings. And so lower lifetime earnings results in lower savings. It also results in lower Social Security benefits. And as a result, women's savings are expected to last 3 years less than men. Now, keep in mind that they're going to live 5 years longer. So it's actually more like an 8-year gap on their retirement score, which is really scary. So if women age into poverty, I think we all know the problem that creates downstream, which is family members have to step in. And so ensuring that your female members are secure for retirement is not only important for them, but it's actually important for the generations that follow. Another group of folks that I think are significantly at risk of aging into poverty are African American and Hispanic members. We see major racial inequities when it comes to retirement in America. We don't personally collect racial data, but we do have a lot of data that we have access to from Social Security, and I think the Social Security data is super telling. African Americans receive almost a 30% lower Social Security benefit than the average white man, and Hispanic Americans receive almost a 40% lower Social Security benefit than the average white man. You combine that with 401k balances that are 40 to 50% below white families. And you can imagine, again, the greater risks present for your African American and Hispanic members. What it was probably not surprising, but I think important to reflect on is that your lower income members are more worried about their retirement security. They understand they have a problem, but they're not sure how to solve it. So when we survey members to understand their fears about retirement, your lower income members are 40% more worried about retirement security than your higher income members. When we try to understand what's creating the challenge around retirement security, there are two things that really jump out. The first is folks saying they don't actually earn enough to be able to save for retirement. And the second is that they're unsure how to invest or grow their savings. I think this unsure how to invest and grow my savings is really interesting because oftentimes these folks don't think that they're eligible to speak to a wealth manager because the wealth phrase makes it seem like it's only for the wealthy. And so oftentimes they feel like investment guidance is not accessible to them. Again, this is an area where I think there's huge upside for credit unions to step in. I mentioned at the beginning this fear of running out of money in retirement. And again, when we survey members to ask them, where they need the most help, it's making their money last in retirement. 60% of folks are saying that's the top concern for them is how do they make their savings last in retirement in a world where they are fully responsible for that retirement security. So let's talk a little bit about how Silvur can help. One of the things that we can do for the credit union, so I think a lot of what I've talked about so far is the member problem and how we support members. But we also want to make sure that by doing the right thing for members, that we're also helping you grow your share of the retirement wallet. At Silvur, we can help you identify return on investment that helps you grow your share of the retirement wallet. We're capturing lots of data that helps us understand where members are in their journey, when they're about to retire, and they're more likely to be rolling over IRAs, when they're getting ready to elect Social Security, so you can capture that Social Security deposit, who has cash savings outside of your credit union that could be good candidates for CD campaigns. So all of this is data that we capture in the system and make available to our partners so that you can be more targeted in thinking about which members you can serve. Getting started with Silvur is really easy. We always talk about walk and then run. Our walk strategy is a real quick start partnership. It's a non-technical integration. The fastest we've gone live is 3 weeks. We can do our side of it in 24 to 48 hours. So it really, truly is a quick start. We provide our marketing partners with a fully actionable marketing campaign that allows you just to copy the assets into your email system and not have to be creating a lot of custom marketing. And our goal is to provide you with member insights that grow your business both in 2024 and beyond. We do also have mobile banking integrations. And so we often find that, 6 to 18 months after partners go live, they also want to add an integration from a mobile banking perspective. And that's something that we can certainly do. But we just flag that almost no one starts with mobile banking integration. They typically start with this custom website that we can spin up very fast for you. And I think the goal there is, how do you make an impact quickly with members? And then you can kind of put us in the queue and do your normal prioritization. So I wanted to make sure that I saved a good amount of time today for Q&A. And so as we maybe just get close to kind of the wrap up of the formal comments, I did want to kind of just share a couple takeaways that I want all of you to be thinking about. The first is that retirement is for all members. It's not just for the 3% that have money with a wealth manager. 99% of your members are going to retire. 99% are going to elect Social Security. They're going to enroll in Medicare, and they need your guidance. I've talked a fair amount today about Social Security and Medicare, and these are the foundations of retirement security in America. If you want to make an impact with your members, making sure that they're equipped to navigate these programs are probably the most important things that you can offer them. They're also super high engagement. In our early days of the company, we used to be direct to consumer, and our highest performing ads were Social Security ads. Members deeply care about these programs because they have paid into the system and they want to get their fair share out. And the final thing I would just say is that there are a lot of segments of members that are at risk of aging into poverty. And when we think about, missions for credit unions of financial wellness for all, we cannot let retirement be just for the 1, 2, or 3%. We have to make sure that we're serving everyone. And that is where I would just encourage all of us to think about, does the solution you have today serve everyone, or is it only serving your wealthiest membership? Amy, that's kind of, I'd say, like the end of the prepared comments. I think as anyone who knows me knows, I can talk ad nauseum about the problem we're solving and can kind of dive in a bit more on the product, but want to maybe take a little bit of time just to see what type of questions are out there so we can kind of kick off.
Yeah, go ahead and feel free to unmute yourselves and ask any questions, or you can use the chat to add any questions or comments on the presentation. Thank you so much, Rhian.
Well, one thing as people may be thinking about questions, I would just flag for you is maybe why now? And I think as everyone on this phone call knows, we're heading into what could be quite a turbulent couple of months with the election. And for members, this is going to be a period of dramatic uncertainty. This is a time where they are concerned about the financial viability of Social Security. They're concerned about the costs of their Medicare. And when you think about showing that you're on members' sides, being able to show them that you care and that you're providing them the support that they need as they navigate these decisions will be particularly important as we go through this election cycle.
All right, well, oh, we have one right here. Let's see. We have someone who currently uses TrueStage or LPL Wealth Management. Does your product help promote this, and is it approved by
Yes.
LPL compliance?
That's a great question. The answer is that almost all of our partners today are actually LPL customers. So it's a really good match for folks that are using TrueStage, LPL. And what we do is two things. One is that we can promote your products, those products and services within the experience. So for example, if a member is reading a class about rolling over IRAs or Roth conversions, those are good indicators that a member has saved something and could be a good candidate to talk to the wealth management team, as an example. And so we can embed schedulers, we can embed links to your site there. Same thing with TrueStage. When you think about just different insurance needs that members are going to have in retirement, we have a lot of content on insurance. And so that's, again, a really natural link out. Myself having kind of grown up in a regulated bank, I think one of the biggest concerns always by an LPL or someone like that is disclosures. And so we have made, I would say, an extra effort to make sure that there is the appropriate space for all the disclosures that are required by different products and services. And so all of that is embedded in the system. But happy also to connect you in with one of those other LPL partners so you can see how those credit unions who are working with LPL are using Silvur to help them.
Thank you so much, Rhian, for today. And that was a wonderful presentation. I think everyone here got a lot out of it. So if there's no other questions, then that would conclude today's session. And thank you so much again.
Yeah, I was just going to say, I guess the last thing I would just maybe say as we wrap up is, and sorry, I don't think I kind of brought this up on my screen. Let's bring it back up, but it's how to contact us. So for folks that want to kind of learn a little bit more, the first thing is you can book a demo at silvur.com. I didn't want to take up all the time going through a live demo today, but we are very happy to meet with you and go through the demo, show you how it's white labeled, help you see how the product is really relevant for your member. You can also just directly reach us at partnerships@silvur.com. And so through that email address, you'll reach Jen and myself, and we're happy to set up a follow-up meeting.
Great. Thank you so much. Have
a
great day.
Thank you so much. Bye-bye.